Hey guys, welcome back to our foundation stock trading course. In this lecture, we're going to be talking about volume. Now, what is volume? When we're talking technical analysis, we're talking about the study of two things, price and volume. So it's not just prices. When you're looking at a chart, you actually see two things. You're seeing the price movement and the volume. The volume is basically the quantity of shares that were traded. You know, when we said that when you have an order to buy and you have an order to sell, and the two prices match with each other, you have a trade, an execution, a fill. All of these mean the same thing. You have stocks that change hand from one person to the other. Okay, a trade occurred, and that trade generates what we call volume. So if 100 shares traded hands, well, that's 100 shares of volume that stock had. So when we're talking volume, we're talking about how many shares were bought and sold. So somebody can ask, well, this stock made 1,000,000 shares in volume today. That means that stock had 1,000,000 shares that traded hands within the day. You can say this stock just traded 5,000 shares in the last hour. So that's really what volume is. Now, when you're looking at a chart, and an example in this chart, you see the price here. This is where the price is at. Where is the volume? Exactly here. So the volume is always at the bottom of the chart. Okay? So when you're looking at this chart, you see on the right side the prices of the stock. So here is the prices. Well, on the left side, you're going to see the quantity of shares. So you see here, it's about 1,000,000 shares, 2 million, 3 million, 4 million, 5 million. So you can see on each day, because this is a daily chart, how many shares were traded on that stock. Now, why do we care about how many shares were traded on a stock? Why do we care about the volume? Shouldn't we just care about price? What does volume have to do with anything? So let me ask you this. If in your neighborhood, okay, let's say you live in a regular neighborhood, and a house costs, let's say, $500,000. Let's say at one point there's a house that sells for 2 million. Can you say that houses in your neighborhood now are valued at 2 million? Not really. But if 100 houses were sold around 2 million each, then can you say, well, the housing, real estate, or a house in this neighborhood is worth that much? Probably, yeah, right? So the quantity does matter. If you just have one thing that happened at that price, does that really say anything? Maybe somebody just wanted to buy a house and, got a really bad deal, but if you have hundreds and hundreds of people who bought at that same price, well, that's the current price. So it's the same things with stock. Imagine you have a stock that not a lot of people trade. And again, we've done the course about the book, the level 2, and how prices work. So if just somebody went and said, okay, I just want to buy 100 shares of this thing, but there was nobody selling it except somebody at a really high price. So the person got executed, got filled at a really high price, bought a stock at a really high price, but it was just one person who bought 100 shares. So would you say, okay, this stock is worth that price now? No. So you need enough people to trade it, enough quantity to be traded for that price to mean what you want it to mean. Okay? So quantity or volume actually confirms price. If there's a price movement, but there's no volume to support it, it's not as meaningful as a price that has volume. Okay? So you can see that there are situations where volume increases. A lot of people trade it. And you see that came when there was a drop. And another here, a lot of volume that came when there was a drop. And let's actually just pull up a chart. So let's see. So let's go on Apple here. Okay, I have Apple on this chart. Okay, so if I'm looking at Apple, well, look at this. This is the volume at the bottom, right? And you can see like, okay, here there's an increase in volume, okay? So over here, let me see if this will work on this. Let's see here. So over here, we have an increase in volume. Here, regular volume, here increase, and you see it's associated with this drop. So something happened here, and a lot of people traded, okay? And also here, if you look here at this side, and I just realized you probably didn't see this because my face is probably covering this right now. So let me put it here. All right, so here you can see it. So you see the volume here, okay? Increased. There was a lot of volume. It was due to that drop. So a lot of people traded here, way more than usual. Way more shares exchanged hands than usual. Usually there's about this many shares that exchange hands. Here, twice as much more. And if you look at this situation too as well, where volume really spiked up, and rightfully so, because look at the stock. Here it was $120, and here it opened way higher, $128. The stock went way higher. Why? Because there was earnings, right? And they beat earnings, which we'll cover in, I don't think it's in this course. It should be in our more advanced course where we talk more about earnings and how you can play those. But you can see that on a news, something came out and it affected the stock. The stock went really up, but there's a lot of volume that came. A lot of people traded that. So the important thing to know and to understand really about volume is the fact that volume actually precedes price. And what that means is when something happens and the stock is going to move because of this thing, you're going to see a lot of volume coming in before even the price moves, right? If the housing market is going to explode before the prices actually go up, you're going to see that a lot of people are buying houses. There's a lot more volume. A lot of houses are exchanging hands. More buyers are coming in to buy. And then prices start going up, right? So it's the same thing in stocks. Before prices go up, you're going to see volume coming in. A lot of people buying. And then after that, that's when the prices starts moving. And then it can just, skyrocket. So you always want to be looking at volume, because volume is always going to precede price. But then if price goes up, but it's not supported by volume, there's not enough people pushing it, then there's very low probability of continuation, right? So if you have a stock, let me take another color. If you have a stock here, let's say, get this back, sorry, give me a moment. So if you have stock fluctuating, and then at one point, let's say this is $9, this is 10, 1 point, and the volume is always, let's say, relatively low. And then you see volume coming in, a lot of volume, okay? Then you're like, oh shit, something is happening, right? Why is there so many people coming in to trade the stock? Something is happening. And this is always going to happen before the price move. And then the price is going to start moving, and then obviously volume is going to increase again, and price might increase. Again, volume doesn't mean that the price increases. It could be an increase in price, or it could be also a drop in price. Okay, you don't know, but it is going to be supported with high volume. Big moves are supported with high volume. Okay, big moves either to the downside or upside are going to be supported with high volume. Now, if there was not high volume, okay, if there was not high volume, and then all of a sudden, prices go up to $13, and there's no high volume, do you expect these prices to keep going up? No, because they might have just gone up because there was not enough buyers and somebody just wanted to buy some. There was not enough sellers, There was not enough sellers and somebody just wanted to buy some. So For him to buy some, he had to push the price up a bit because nobody wanted to sell at that at the low price that he wanted. So he had to push the price up, and it's just that, right? It happens. It's a timing thing. Maybe a fund wanted to buy, a million shares, but there wasn't enough people, and the price got pushed up. So if there's not enough volume, it's less meaningful, and the price is very, very likely to get back to where it was, as this wasn't supported by volume. So always make sure that volume supports your direction. Now, when we're looking at volume, how do you know if it's a lot of volume, it's not a lot of volume? Like, how would you know? Is a million shares a lot of volume? Is it not a lot of volume? Right? So stocks have different volume. So if I'm looking at something like Apple, and let's go on Finviz here, Apple, well, how much volume did it do today? How many shares did it trade? There's a place on Finviz, you can actually go and see that. And it's right here, okay? So here, you can see that it made about, and let me see, I wanna make sure that you guys can see this part. So let me actually, let's put it here. So on Finviz, okay, I'll put it here in case my face is covering it. So you see volume here. This stock makes about 25 million, made 25 million shares today in volume, okay? That's just today. But what does that tell me? Does that tell me anything? Is that a lot of volume? Is that not a lot of volume? Okay, well, if I look at, I don't know, any other company, let's say I'm looking at Ford. Well, Ford made 33 million today. Okay, I don't know if I'm looking at, let's go just find a random company here. Maybe let's go in these channels and take a random company, this one. This one only traded 10,000 shares, right? So you have a company that we just looked at, traded 35 million shares in a day. And then you have a company that only traded 10,000 shares. So you have companies that trade amounts of shares that are, in all kinds. You have companies that trade 100 shares a day that are almost nobody trades them. Now, the volume that it did today doesn't mean it does that volume every day. So what we usually want to look at is the average volume. What's the average amount of shares that it does in a day? Okay, because every day is going to fluctuate. So we want to know an average, okay? And usually everybody looks at the 3-month average. So the last 3 months worth of volume, what's the average of that? And on Finviz, here you have it. It's right here. Average volume, 3 months, right here. So this one actually on average does 28,000 shares a day. It happened that today it made 10, but some days it does way more. So it makes about 28,000 shares a day. If I go back to, let's say, Facebook on average, well, we actually didn't check Facebook, but so Facebook on average does 17 million a day, okay? So when I'm looking at high volume, is there a lot of volume to support a price movement? Well, what does a lot mean? Because if I'm looking at Facebook and Facebook did 13 million today, is that a lot or is it not a lot? I can't compare this volume to the 10,000 that I just saw of the other company, right? Because the other company always trades about 30,000. This one always trades about 17 million. So how can I say if this is a lot or not compared to the other one? By looking at what's called relative volume, okay? Which I'm going to tell you this right now. This is one of the most important things that you want to know about. Relative volume, okay? Write it down, put it on a piece of paper, draw it on your wall, tattoo it on yourself, whatever it is you have to do, but you're going to have to look at relative volume all the time on anything that you trade, okay? Anything, okay? So relative volume is actually comparing the volume that a stock did to itself. Because that's the only metric that matters, is did I trade a lot compared to what I usually trade, right? Because if Facebook usually does, again, if Facebook here usually trades and about 17 million shares. But today it did 13 million shares. Did it trade a lot? Not too much. It didn't trade a lot relative to how much it usually trades, right? Because usually, and let me bring up a calculator. Usually it trades 17.6 million shares, but today it traded 13.9 million shares. So if I do 13.9 divided, or right here, let's see, 13,908,894 shares. That's what it did today. Divided by, usually it does 17,620,000 shares, right? So it actually only did 0.789. So 0.79 times the usual amount of shares that it does. So if usually one is the stock doing exactly the amount of volume that it usually does, if it did 0.79, it means it only did 79% of the volume that it usually does. And you can see on Finviz, it actually calculates that for you here, relative volume. So I actually have the relative volume for the stock. So today it wasn't high. But imagine that stock had traded a lot today, and it had traded, let's say, instead of, this is about 14 million, let's say instead of 14 million, it traded, 28 million, okay? Imagine that. Imagine this stock today traded 28 million. So 28 million divided by its average volume, which is going to be 17,620, gives you 1.6. So that would mean, okay, well, you know what? That stock traded, 160% what it usually trades, 158% what it usually trades. Okay, so 55% more than what it usually trades. So then you can say, okay, well, something unusual is happening with it, right? Because the only thing you can compare volume to, you can't compare volume from one stock to volume of another stock. Makes no sense, because they're two different separate stocks. What you can compare to is the volume of a stock relative to itself. Okay, so that way you can know if there's something unusual happening with it. If a stock usually does, let's say, again, so let me pull this up here. So this is the relative volume. If a stock usually does, let's clear this up. If a stock usually does 1 million shares, okay, its average volume is 1 million shares, okay, and today it did 5 million shares. Or let's say actually its average volume is 2 million, okay, just to make it more interesting. Average volume is 2 million, and today it did 5 million shares. What is my relative volume? And the function is very simple. The function is average volume. Very simple, and I botched it. So the function is the current volume, so today's volume, okay, which is this, divided by the average volume, which is exactly what we calculated earlier in the Finviz example, right? So the volume that it did today is 5 million. Okay, so I'll put 5 million here. Divided, how much does it do usually? Okay, well, it does 2 million. So what is the relative volume? 2.5. It did 2.5 times what it usually does, right? So, something's going on, right? And if I look at maybe in another situation where it didn't do as much volume, let's say today it only traded, so it does 2 million average, but today it only did, 0.5 million. So what's the relative volume? Then it would be 0.5 divided by 2, which how much is that? 0.25. So 0.25. So it only did 25% of what it usually does, right? So not very meaningful. So if the price is going up on today, right, and there's a big price move, but there's not a lot of relative volume, you'd be like, okay, well, why is it going? Like, there's no support, there's no volume. It's not a lot of people who have decided that. The stock usually trades more than that. So it might be that the stock went up or down just because of a big seller, because there wasn't enough buyers or sellers to support the other side. Maybe there was somebody selling and there wasn't enough buyers, and that's why the price went down a lot. Or maybe there wasn't enough sellers but somebody wanted to buy and he pushed the price up. But it didn't happen on a lot of volume. So it wasn't the decision of a lot of trades. So it's less meaningful. But if the price went up on high relative volume like this, then it's way more meaningful, right? And when we're looking at relative volume, again, and let me go on Finviz and actually see. There's a section here for the top gainers and top movers. So let's see, like on something that moved like this today, like this thing went up for 65%. Okay, this went up, and let's see if I can get it. This went up 65%. Okay, huge. Okay, so on something that went up a lot like this, look at the volume here, and I'll try and zoom in again a bit, as much as I can. Look at the volume here. You see how high it is compared to usually? So usually it's not a lot of moves. Look, there's not a lot of volumes, but you see on the days that it really moved. Because again, you got to see that like this went from $3 to like $5, which is a huge percentage move, right? But look, on those days that there was big moves, look at the volume. So the volume is extremely helpful when there are big moves, okay? And you can see here, for this stock, what is its average volume is usually 200,000, but today it traded almost 1 million shares. So its relative volume is almost 5 times its usual volume. So it's meaningful. Something is going on. You're comfortable going in that direction because it's supported by a lot of people, okay? And by a lot of transactions. And again, so you always want to make sure that, you don't want to make sure that there's high volume. It depends the trade that you're taking. But again, look at this, in this situation, again, something that moved up a lot, okay? And let me zoom in a bit. Again, something that moved up a lot. Look, almost no volume on these days. And then here, on the days that it went from 60 cents to $3. So that's something huge. Came up with a lot of volume. And came with a lot of volume, right? And today, again, let's see this one. Okay, so that's hilarious, right? This stock usually does 154,000 shares, but today it did 8.9 million shares, right? So a lot of people are buying. So that's 57 times more volume than it usually does. So if there's a stock going in a certain direction on high volume and you want to go in that direction, that's good. Okay, if you want to go in a direction that something is going at and it's having strong volume, it's good because it needs volume to keep pushing. But if something is going in a direction with no volume, then you might want to go in the opposite direction because it's probably not going to be sustainable and it's not going to stay there for a while. Okay, so think about it, re-listen to this class because honestly, volume is one of the most important metrics to look at, and relative volume, and a lot of people bypass it, and it's honestly extremely an important part of technical analysis, and you should always have an eye out for volume on anything you trade. Okay, so that being said, hope you enjoyed this lecture, and I'll see you guys in the next one.